Start recording. All right, cool. So this is my little weekly outlook for both NASDAQ and the US30 Dow Jones for the week of November 19th going into this week. Last week, we've seen these order blocks in these major areas be respected tremendously. I mean, again, we had this really nice bullish liquidity grab to the downside that reacted off this consolidation zone almost perfectly on NASDAQ. And then that just sent us off into a really nice bullish market structure that I was just telling you guys, right? If we cleared this resistance level and turned it into support, that was going to be extremely, extremely bullish for the overall movement of the continuation upwards. Now we are sitting on another major level where, here's a major, major, major bearish order block that we come up here, especially with that liquidity. So what I'm looking for, short term, I'm looking for a nice little pullback down here to this downside. Again, we also, for all the ICT traders, fair value gaps, right? Imbalance. We have a really huge imbalance here. And again, imbalances are a very real thing. No matter what model you use, they are a very real respected area of context on the chart. So short term, I can definitely see us rejecting off here, coming back down to the downside, trying out this little liquidity here to see if we're going to turn this resistance into a now support level. In addition to that, that would just continue to make healthy bullish market structure upward, making higher highs and higher lows. As you can see here, some little key notes that I want you guys to take away going into this week is we have definitely a bearish grab here that was on Wednesday, November 15th. We came all the way up here trying to just in one giant 4-hour candle swooped up all this liquidity, and then the sellers just pummeled the price all the way back down. We came up here and rejected this area a second time, making a lower high. So again, this is just telling me that we're kind of just wanting to come back down here and retest this support and seeing if we then want to go higher. Now, here's going to be the fun little thing with NASDAQ. So if this plays out, okay, and the market opens in about 6 hours, so as a recording of this. So if we break back down here to the downside, just like how we did here on Sunday, or right here. Yeah, we rejected back down here, and then Monday we came down just like I was looking. We never really touched it. We just kind of early, again, we dipped into this imbalance, got this liquidity, and then we just never seen it again. If that's something that happens here, again, guys, markets move in patterns. It's the easiest thing ever to see how no matter what asset you trade, they all move in patterns. They all move in the most similar fashions ever. So in this little aspect right here, you can definitely see that the buyers are definitely in control overall. So until these major areas get disrespected, and by disrespected, I mean we break this, we break this, we break this, until I see multiple breaks in a lot of these major areas, I'm still, leaning bullish. We're just making healthy bullish market structure. But again, short term, so I can see us starting the week out Monday, maybe Tuesday, Wednesday. Again, I don't know the exact days. Okay, I'm not Nancy Pelosi. But if I had to see where the market's most likely going to be heading starting off the week, we're going to be starting the week off to the downside. Then we take this liquidity down here. We move to the upside. And then this is where, again, we have Chop City. So we could definitely just chop around. So if we do break this liquidity here, come up here and test a major resistance level, I mean, we could literally just chop around here because there's just so much pressure on both sides once we get around here where we could just absolutely chop just like we did here, just like we did here, just like we did here. And this is something with indexes, right? Indices always do this where they have these extremely major impulsive pushes and they just push, and it's very trendy. And then once they chop, they just freaking chop because they're just stuck in these areas. And you guys have to also understand what are indexes, right? People are putting money in these for their retirement accounts, right? They're just investing in these long term. So that's why indexes, when they trend, but when they go sideways, they can go sideways for quite some time. So that's why people like myself, you may have a few good handful of trades a week, and you may have one trade a week, right? It really depends. So when you choose to trade a trending asset like this, like I do, and like what the Pack Trade Group does, sometimes you are going to have just no trade days / no trade weeks, and this is the representation of why that is. Taking a look at US30. US30 is kind of, again, NASDAQ and US30, they move very similar. They have very similar market structure, but there's a few key differences that I wanted to kind of outline here with what I see with US30 and difference with NASDAQ. So just like how NASDAQ, we have a very tight chop range here. So if we break back down up here, we could chop very, very tightly. And this order block that I'm showing you guys here, I mean, this is just all the way back here. And this isn't a mix of between just a bunch of liquidity. And what I'm trying to represent here is if you minimize this, you can see there's a huge impulsive wick here in combination with a huge imbalance here. Now, part of this imbalance has already been filled, so that's why I took this rectangle. I drew it all the way to the top of the candlesticks here, taking this wick into consideration and also this ginormous wick here. So I just combined the two because, again, this is just an area that hasn't been tapped into, and it's definitely caused price to just impulsively move in a singular direction. So this is a very large key level for me, very large key area that if we come into, we're most likely going to reject the first couple times we tap into it. Because again, guys, what are these levels? These levels are major orders, major institutional orders that are just, again, if you just want to imagine them placing a bunch of orders here in this giant block, as soon as something gets tapped, boom. That's why then price will dig a little deeper and then reject again. Price will dig a little deeper and then reject again. So that's what causes this chop, right? It's not just imaginary rectangles on a chart causing price to move in a single direction. There's a reason behind it. And this is the reason for, I know, again, visually making sense of why price moves like this against all these fancy, funny little rectangles. Again, now let's take a look at US30. So US30's Chop City area, it's a little wider. So it could be a little bit more friendly to my trading models that we got going on for US30 moving into this week, because if we come down here, now we got a fair value gap here, or an imbalance, whatever you want to call it. Again, I don't care about the names. I just want people to know and understand the fundamentals and the philosophy behind what this is. Okay, this is an imbalance, right? When price comes in here, there's a high likelihood that it's going to take this liquidity and move in the favorable direction of the trend. The trend right now, buyers are definitely in control. We're making higher highs, higher lows. We broke a major level of support or a major level of resistance. So most likely if we dip down here, we're going to keep on going to the upside and break through a major resistance level, being this one here. Again, the market's moving patterns, guys. You see this happening all the time. We consolidated, broke down, took liquidity, broke through a major resistance level. That's all I pretty much, this right here, I'm just copying and pasting it into this price action here. That's literally what I'm seeing. So for US30, I'm seeing us reject this major level here, come down here, see if we want to play around with this little local support level. If we do, kind of do a little fake pump here, and then we come down here, come into this major area of liquidity, continue bullish market structure to the upside, making a higher low, and then coming up here to make a higher high, playing with this major level here. Again, this is kind of the same thing that I was wanting to show you guys on NASDAQ, where I'm using multiple little liquidity areas and just grouping them into one big cluster here. So you have this huge, huge, huge impulsive wick to the upside or to the downside. Okay, we came up here, and again, what are these wicks and why do I care about them so much? Because when you have these huge impulsive wicks like this, guys, that means in a 4-hour candle, in a 4-hour moment of time, price was able to climb up so high, all the way up to here, but then the sellers were able to beat them all the way down until it closed all the way down here. Okay, so this is telling me that there is a lot of attention here for the sellers. So if price comes back up in this major area, which you can see it has, it tapped into it here, tapped into it here, tapped into it here. So you could even argue that it's now roughly like this that hasn't been tapped into, but I just like to show a representation of the full picture here, that the next time we tap into this level, and again, if you guys want to check my work here, it's August 10th on a Thursday. This is just something that hasn't been tapped into, right, since that's been formed. So the next major area, if we do break this level of resistance here, is this area where we could reject extremely impulsively to the downside, enter a little bit of Chop City. But again, it's a little bit bigger. It's not as condensed as NASDAQ here. So we could still be a little bit cleaner price action wise until we want to get out of this area. But once we get out of this area, it's going to be still smooth sailing, continuing that bullish market structure to the upside, where we then have to play with this liquidity here. But other than that, I mean, we just got smooth sailing. I mean, we got some key little checkpoints, obviously, as we go higher, but I don't really care about that stuff until we break what's local to price action. You guys know I never really like to sit here and draw 1,000 rectangles on the up and down side of the price. I like to see what's local to price, where is price most likely going to react off of in relation to where it currently is, and that's what I'm currently seeing here. So again, long story short, both US30 and NASDAQ, I'm still bullish long term right now. On the higher time frames, we are absolutely still bullish. But short term, kind of like what I said last week, short term, I see a little bit of a pullback to continue this bullish market structure to the upside. And I see all this liquidity as motivation for a price to keep on going higher if it wants to continue that bullish market structure. Now, again, if we start to make even lows and even highs and consolidate a bit around this area for both US30 and NAS, we could absolutely start shifting to the downside, right? And then my bias will start to change once we sit here and break all these key levels. But right now, I have nothing but bullish intent and bullish bias for the long-term trend and what I see going on into the next week. And if that's the case, we could form the weekly low either Monday or Tuesday, and then just keep on climbing higher, making Friday the new weekly high that we move on into for what we see here. If I have any questions, let me know in the weekly outlook, or no, actually let me know in the pack chat. But that's kind of what I'm seeing, guys. I hope these are really useful for you. I just want to make these really quick every single Sunday, so that way you guys can really see what I'm seeing, what you can kind of understand as far as order blocks go, using context. Again, I don't trade off this. I'm not a swing trader by any means. I just want you guys to see what I see, so that way once I see price hitting major key levels and key areas of interest, I can then start to say, okay, well, if I see a setup happening here with my current trading model, then it's just an even more A-plus setup, or vice versa. If I see a trade setup happen, say, in this level here, then I can just literally feel that much more confident shorting to the downside, right? The biggest thing that I look for when I'm using this is I don't want to sit here and end up trading inside of these areas, right? If I see price inside of this area and I see a potential trade setup, I'm not going to take that, because it's just, who knows what's going to happen, right? We don't have any directional bias on the higher time frame. So it's also a really good representation of understanding why we are moving sideways, right? We literally moved sideways all week. Last week, we moved sideways all week the week prior. I mean, this is why. Instead of asking, I wonder why we're doing this, you can literally just use context clues for understanding where price and liquidity is most likely at. Snipey says, so tempting to set an order at the bottom of the imbalance. It's not. Simon says exactly what I was saying. I must be doing something right. Yeah, man. You don't have to have all these crazy indicators on your chart. You don't have to, do a bunch of craziness, guys. Price moves where there's least resistance. I don't care what strategy. I don't care what model you guys use. That's what price likes to do. It likes to move where there's least resistance, because again, you got to think from a logical standpoint. Where is the buyers and sellers most likely going to cause the most activity? And these are where the buyers and sellers cause the most activity, right? If there's a giant gap where no one got to create business, right? If there's a giant gap where there was not a lot of buying and selling going on, then you would expect that if price does get into this giant gap in combination with a major point of resistance that could be turned into support, you would conclude that there's a high likelihood of price reacting off this level. And then once price reacts off this level, where could price most likely react to next if it wants to continue the trend? Well, if it wants to continue the trend, it's going to come all the way up here to this major area of resistance, see if it wants to break through the resistance. And if it does, just keep asking, the question. And the answers to the questions are the context clues on what the major institutions leave behind, aka wicks, candles, footprints that you can kind of see on the charts. And it's really good to kind of just have these biases in the back of your head and watch how they play out. So I hope this was really useful to you. I like to do these. I'm going to keep doing these every Sunday. So I hope you guys have a wonderful rest of your day. And I will see you guys tomorrow, Monday, live 8:20 a.m. EST. Have a good day, guys.